Hey, good afternoon, traders. This is Trader Tim from eMiniMind doing a Monday market analysis video. It's the 19th of April, 2021, and lots of good stuff to talk about today. The first thing I wanted to highlight on the ES is what we were talking about last week as we came into the negative 61.8 targets. And so you can see the two 50% that I have drawn. This is on a weekly chart here. The first one is a high to high extension, and we've had these drawn up for a couple of months now, um, going all the way back to the beginning of March is when the first one actually traded, but the anchor point was drawn up to the back to the middle of February. So that had a target of the negative 23, which we blew past pretty easily, and then we approached the negative 618. And just below that, we had a traditional low to high retracement, and that had a negative 618 target at 41.29. If I go to the daily chart, we can see a little better. We talked about this a lot last week because we were kind of at the 41.29 to start the week, and then that little extra lift took us to the 41.70. I'm going to turn off the extended hours here so we can see these gaps a little bit better. Speaking of gaps, let me flip to the actual gap chart here, and you can see today we took out one gap from last week on the 15th, and if we get rid of that, we can see we have a little unfilled gap from Friday's close, and then the next gap would be below us here on the ES at 41.2275. I put on a hedge in both the Qs and the SPY in the form of buying puts on Tuesday at the close and then on Friday at the close. So I did the Qs and then the SPY. And I only went a few weeks out because I'm expecting the corrective move to happen short and fast, and you pay a lot less for close expiration. So the nice thing about buying puts is, the Tuesday close, the first ones that I bought, um, really when a position like that, a hedge, is going when the position's going against your hedge, you're making a lot more on the long position that you're hedging. And when you're buying puts, they decrease in value. They're not going that extreme against you, even though the market went up. Because what ends up happening when the market does go down, and this is why buying puts is a lot of times more beneficial than buying calls, especially as a hedge, you have an increase in volatility. That helps increase the put value. And then when the market is moving down, they can accelerate a lot quicker than they do on the downside, so going against you. So kind of going back to that theme of asymmetrical risk. Um, Another thing I wanted to point out here, let's see. Oh, before I do that, so I wanted to read a little passage from a book, Annie Duke's latest book. Actually, she's the one who wrote Thinking in Bets, and I thought this was a really good paragraph. I'm going to change the word. So this book is all about decisions. It's not necessarily trading specific, but I'm going to take the word decision in this paragraph that I'm about to read and just change it to trading or trades. And you can see how well this mindset applies to your trading. So you're going to make thousands and thousands of trades across your lifetime, some of which will work out and some of which won't. The goal of good trading can't be that every single trade will work out well. Because of the intervention of luck and incomplete information, that's an impossible goal, and we all know this. The trades you make are like a portfolio of investments. Your goal is to make sure that that portfolio as a whole advances towards your goals, even though any individual trade in the portfolio might win or lose. And so I think it's really important to remember we want to be looking at things, at trades, in groups of trades and not be so focused in on just one trade or the last trade that you made. So keep your eye on the bigger picture. Focus on a larger data set. You don't want to be making drastic changes to your strategy based on one trade. And then the more trades you make, the less one individual trade is really gonna have an impact. So I thought that was really good and very applicable to trading itself. Um, the next thing I wanted to cover is, so we talked about some hedging possibility here we talked about putting on a hedge for the possibility of a pullback to protect some of the long positions rather than closing out entirely and then trying to buy back lower. I wanted to highlight um, Bitcoin here because it is in a very nice example of what we talked about last week with coming back to the trend line. So here's the uptrend line that's I've had on the chart since all the way back here at the beginning of the year, and also in an extension high to high. We pulled back to about the 52,000 level at the end of March. That was a nice buy point. And then we came right to the negative 23% target. And on this most recent pullback, look where we came, right to the uptrend line. So what I would do here is just extend the extension high to the new high, and that gives us roughly the 54,000 level, right in line with this uptrend line for a pretty strong buy area. We're holding this prior swing low down here, which is kind of the bigger one. We've got one back here, one here. You could draw a second level of trend line, like up here, if you connected these lows. I chose to just keep with my main trend line down here. And so anytime we come up to a negative 23% target, which is why I wanted to highlight, as we saw in the prior high to high, and we want to be looking for that next pullback. If we break through the negative 23% target, then you're looking for a move to the negative 618. And anytime we make it to the negative 618, you got to be thinking, okay, we're a bit overextended. I'm not going to be calling a top, but look for counter trend setups. Rather than try and pick the absolute high or the absolute low, by using the chart and those targets as areas to say, okay, this is where I might want to be looking for a counter trend trade. When we fill a gap, when we're approaching the prior day's high low, when we're coming up to a negative 23 or a negative 618. Those are all areas where we might see a reversal. And so that's when you want to come to the 512 chart and be looking for, that swing low to break and then to draw up a retracement on the 512 for your entry. I wanted to, next thing was scroll back to Friday and talk about a little, it wasn't super little, it was a pretty nice long or a nice short trade, and it came in the form of the second halfway back for the day. So if I can get us to Friday, I didn't end up having any trades on Wednesday or Thursday. It's been a little bit light for me the last couple of weeks, but that's okay because all that means is there's less risk being taken and less losing trades potentially to be had. So here's Friday, the 5-minute chart. The first setup, I'll get rid of this and we'll draw it back here in a minute. First setup was pretty small. This is all in the first, basically 5 minutes, the high to low. It traded at the 50% and it made it to its negative 23% target. So drawing up the next halfway back and knowing that the gap, so we had gapped up, knowing that the gap fill was below us. That was another reason why I liked trading short as a continuation off the open. So this one traded right after the 15-minute mark, traded up to its 50%, and notice the 50, the actual entry is a 71.25. So if you add 2 points, you get a 73.25. That's well outside of the 618. So even though it is visible on the 5-minute, I felt like it was a small enough setup and it was a good continuation that it was worth taking on the essentially on the larger time frame. I mean, if you look over here on the 512, it's super visible. It doesn't look that huge, and the distance between the 50 and the 61 is less than 2 points. So all of those things check out. If it was a giant setup on the 5-minute, where the distance between the 50 and the 61 was larger than 2 points, then I would want to wait for that level to trade and then take a smaller setup off of the 512. But this one traded pretty nicely at the halfway back. We ended up testing it twice, but not moving the stop until you break the swing low is a helpful way to keep your stop a little bit, give yourself a little bit of wiggle room without being overly too aggressive and getting taken out on a potential retest like that. And then from there, it's just a matter of drawing up the next retracement, trailing the 61.8, and then once we break down from there, I just trail the swing highs on the way down. So that was a nice little short that took us down into the gap fill. When we made this last dive down here at the top of the hour, I chose to come in and just trade the most recent 618 because we were, again, approaching the prior day's close, a strong possibility for a reversal to occur at that point, or to get some, in this case, support. And so coming in and tightening my stop, not just flattening the position, because if we went lower, then you'd still be in the position, but tightening my stop by drawing up the next retracement and giving me a little bit tighter entry there, or a little bit tighter trail stop. So some good takeaways from Friday's trade. That was the only one that I had, and today was also a little bit quiet to start the day, but expecting some good things now that we've sort of got a little bit more volatility in here with at least a couple of down days in the mix. You can see on the Qs, we're mostly just moving sideways. So this may not end up being a big sell-off, but just to get a little bit of shakeout, build a potential support level that eventually, if we do go higher, we can then pull back and have sort of this shelf to rest on. So I think we'll leave it at that for today. You can see on the SPY chart how we're above this upward channel, and so just looking for us to kind of pull back, even if it's just a little bit. We don't even have to make it all the way to the next 50% retracement, like so. If we take a look at where that would be on the ES chart, we are all the way back down, going from a traditional. It would be all the way down at 40.13. What would be more realistic is a high to high, and so that's a 40.78. But if we just kind of drift a little bit here with, some sideways action, that would also be adequate in terms of building a support level for the future. The uptrend line is all the way down here at 39.20. So if you go back to last Monday's video where we talked about catching up to the trend line, it would take us a while. It would take a lot of time moving sideways before this uptrend line actually caught up. So got the hedge in place. If we go higher, great, make money. If we go down, great, I'll make money because take that temporary hedge, cash it in after the move down, and then you still got the long position to reap the benefit on the upside. So tomorrow morning we'll be doing a live trading session. You can check that out over at eminimind.com/VIP. I hope you have a great week, and if you have questions, drop them in the comments below.